beautiful shape here that gives us this idea here of being able to identify how these trades should set up. See what I'm trying to do here is just keep the symbol the same, and we start recognizing that that is a 2Sigma sell trade right there. A 2Sigma sell trade right there. And of course, on the other side of that, we would obviously have the opposite. We'd have this type of setup here. And this would be what we would then label a 2Sigma buy trade coming in from this process here. So if we kind of start to understand that that is kind of what you're looking for, what I'm kind of obviously seeing here is should be relatively easy to spot. The trade that I'm now looking at is, of course, this one here. Can you see that? So when you look at that as a storyline, you then say to yourself, right, that's obviously this guy here. Red's going up, blue is going down. That's probably going to be a fast money sell trade that's going to come from that. Probably a fast money sell. And you can see that this was on a red candle already. So the challenge, of course, is getting filled on this. So the idea is to then start working into that fast money sell if you can. And then guess what? We got a fast money sell, didn't we? We got exactly what we would have wanted from a 2Sigma type trade right there. It's the perfect example of what a 2Sigma could potentially look like if you're paying attention to them. Now, I know this isn't quite the same, but obviously if you're looking at this one here, see how the blue line here is going up against the red line here? See that? So obviously that's into this candle here. So if the blue line is going up against the red line that is now falling, well, that's a 2Sigma fast money buy trade starting to show up here. It's already on a green candle. So just like we did with the red candle, your aim is to try and buy into that space there beside that trade, because obviously that's going to be part and parcel of that process. You're wanting to get in the fast money, but you don't want to pay fast money prices. You want to pay discounts or premiums, right? So buying into the fast money move there gives us this opportunity to then take our shot at what should be a fast money break to the top side. We get a fast money break to the top side. So there's two very good examples. Remember, this isn't going to chart in terms of it's not going to chart in terms of scaling, so it doesn't matter which line is above the other line. A lot of people get kind of hung up on that as an idea, is that the line's got to be above the other. Well, it doesn't scale that like that, so it's not that it has to be above or below. It just has to be going in the opposite direction. So when you see here the fast money, there's also a fast money trade here, isn't it, or in this candle? But obviously this candle's at already starting to break sell side. So if you were going to trade that as a fast money sell, the only price you could trade is going to be in that area there, because that's where the fast money signal comes from, yeah. This is also a fast money candle signal here. So you'd be looking at this one, but this one sells almost immediately from the open. So that would have also have been a fast money sell area there. And that you obviously would have struggled to have got any type of fill coming into that narrative, any type of narrative at all. You can see that this is a fast money buy trade here. This candle here is a fast money buy trade, but again, you can look at that fast money buy trade there and say, well, realistically, I want to try and get into this candle, but it's going to be a challenge to get into a buy trade there, and it's also relatively high in the price scales here. So, yeah, you might have been lucky. You might have been able to get filled on it, but certainly it's a bit more challenging. And it does result, again, in a fast candle. That's what you're looking for. It results in a fast candle outcome. And the more speed we get on these outcomes, the more this indicator becomes valuable to traders, doesn't it? Especially retail traders, because you want to get paid quickly. You want to be in. You want to be risking limited amounts. And obviously you want to tie it in with your relative value read. If you can't tie it in with your relative value read, you probably wouldn't be taking the trade in the first place, which is probably correct. It's probably correct. You want to try and wait this until you get the right trade at the right price, because you're looking for stuff. You're not just taking it because it's there. You're taking it because there's a reason why you're even looking in the first place. Otherwise, you're not going to be clued into exactly what's going on. You need to know that stuff. You need to know that the value is bearish in the first place or bullish in the first place, and then you need to be taking your shot. Now, I quite like the sells. As you know, we've got sell side value starting to come in, and we've been closing off our long trades on upticks, so I've been more inclined to be leaning on the selling opportunities. Well, we got one. I just showed you. We got a selling opportunity. We showed you that fast money sell coming in off of the 22,540s. The value was then sell side, as we showed you. Agreed? So the value is sell side. We're trading against VWAP, so we know that we're in trouble. So we've got to be careful. Got to be careful. And then when we sell into it, we've had a fast money break back to where we knew was the probably the capper price here, which is exactly where it turns out to be. It's the capper price here is absolutely jammed solid here, isn't it? We've not been able to make much progress against this price at all. And you know, we're obviously watching for opportunities to peel back into that as a sell trade, knowing that we don't want to sell down here because this is in that no man's land of VWAP rubbish going on, and that we'd rather make sure if we're going to sell it, we have to wait for that pullback sell opportunity to play. So, you know, looking across things like the S&P, looking at things like that, I've found a couple of trades. I found a very passive looking kind of 2Sigma trade coming in at the top edge on the S&P. So that was the next one at 57s. That was at a time of 1509. So that trade was this little bad boy here, and that's where we sold again. But on that occasion, you saw that the value was peeling back to the downside here, and this would have been a reasonable, what we would call a reasonable spring trade here. And from that, you've been able to take a little shot at the downside. Now, I don't like the arrival of the volume here again, so that's obviously the takeout of this capper price. So the arrival of big volume at that stage off of a VWAP, suggesting that you should definitely book some monies, book your cash, and get ready to play again at a higher price. Pretty good. Sell side values definitely seems to be the play at the moment. Looking at it from a spreads point of view, it's also sell side value, isn't it? Buy side in the early stages of the swing, sell side in the sell side after the initial balance is out the way. So that seems to be about right, because the initial balance sets off a top line here. See, there's the initial balance coming in here, yeah? 1442 area. So that should be the initial balance now set. And during that initial balance, we're reading to see which direction the market's going to break at that stage. And you can see I have a lot of sell side value for the market breaking south, isn't it? A lot of sell side value for the market breaking south. So we know that if we can break the initial balance ledges, and we've rejected here, we've kind of rejected here, but it looks as if we should be able to take this market sell side with the sell side value we've got now. And that's it. We're sell side for the day now. So what do? Well, we go to the top edge and we anchor our VWAP against the swing high. That's what we do. Pretty simple stuff. So we anchor our VWAP against the swing high, and we now start working off those ideas, don't we? So this VWAP had a seller right here, which is us, interestingly enough. So it turned out our trade was the algorithm. We have turned into algorithms. And good solid sell-off. So VWAP is still valid. VWAP is still valid, so we're not having to wait for the price to pull back. So we need to see some volume building at lower prices to start dragging that VWAP down. And we're in good shape.